Hello and welcome. The amount of taxes that you and I pay to the government is going up. It's usually in two forms. One is the direct tax or the income tax that I pay or you pay after the income that we've earned at the end of the year. And the second is the indirect tax that we pay when we buy goods or, for that matter, even consume services. And one of the biggest impact of that indirect tax perhaps has been most visibly the price of petrol and diesel, which has been going up. And a lot of that, of course, goes to the government. Now, some interesting trends have happened in the way taxes have been collected, particularly in the last year, mostly due to the pandemic itself. For one, the indirect tax, which I just talked about, has now gone higher than the direct tax. So what we consume by way of goods and services is now more than the direct tax that the government collects, which comes in two forms. That is, again, the individual tax that I pay, as well as what companies pay. Now, the individual tax in itself is personal income tax is now on par with corporate tax, which is again somewhat unusual, and we'll talk about that. So the amount of taxes that you and I pay individually is on par with what companies pay. The reason could, of course, be that the taxes that companies pay have gone down in the absolute percentage. It used to be 30%. It's now 22% since September 2019. So what does this all mean? Also remember that our household taxes, which is the combination of indirect taxes we pay when we buy things or consume things, and the direct taxes, the direct income tax that I pay on my income is now, as I understand from reports, is almost 75%. So does that impact things, and what could that mean going forward, particularly into our own household budgets and to, of course, the economy at large? So let's try and address these questions with two experts. I'm pleased to be joined by K Bhattacharya, Editorial Director of the Business Standard newspaper, and Dinesh Kanabar, veteran taxman and CEO of Dhruva Advisors. Thank you both for joining me. Let me get a broader sense from you, AKB, in terms of why this is happening and what does this reflect?
Well, to understand what is happening at present, we must go back in recent history. And when I say recent history, you must look at what was happening in 1991, which is just when the reforms had begun. You will be interested it will be interesting for you to know that the direct taxes at that time, as a percent of GDP in 1991, was just 2%. And indirect taxes as a percent of GDP in 1991 was 8%. Now, what has happened now is more or less the reverse, in a sense that direct taxes are still around 4.5% of GDP, but indirect taxes have crossed the share in GDP of direct taxes to 5.4%. Now, this is probably, from an economist's point of view, this is a regressive movement. Because as we all know, that direct taxes are more equitable, taxes are paid depending on what you earn, but whereas indirect taxes are not equitable, whether you are living in Bombay's high-rise or whether you are living in a Bombay's chowpatty or in a slum, you pay the same amount of tax on the petrol that you buy or the Colgate toothpaste that you buy. So, which is why economists have traditionally front on this dominance of indirect taxes. Now, in my view, what is happening now, let's say in the pandemic year, is actually more a reflection of the economic stress that the Indian economy is going through, in the sense that indirect taxes are continuing to be depressed, but because the direct taxes are more depressed, you are suddenly seeing that indirect taxes as a percent of GDP is more than direct taxes. As you pointed out yourself, that individual income tax is actually has done quite well, but the corporation tax hasn't done quite well, and largely because reduction in the corporation tax rate, and also the companies have also taken advantage of many of the exemptions and the pandemic facilities that the government has given. So in my view, what has happened in 2020-21 is a reflection of the pandemic, the stress, and most importantly, the huge taxes that were levied on petroleum products which has given us this cube of where excise duties on petrol today account for almost 2% of GDP. This is quite a remarkable thing, that today you are paying a huge amount of taxes on petroleum product, which used to be less than 1% of GDP even 5 years ago. So I think that's what has actually in brief has happened right now in 2021.
Right, and we'll come to what this could mean going forward. Mr. Kanabar, let me come to you. How are you seeing these numbers, and how does this contrast with maybe a developed country or any other tax system that you are familiar with?
So first, Govind, a factual correction. Individual taxes today actually are far more than corporate, not equal.
Okay.
So at a highest level, an individual pays 43% tax.
Yeah. No, so I was referring to the quantum of collection, not the percentage.
Okay. Oh, sorry. Okay. But when you look at corporates today, if you are a new manufacturing company, you are 15% plus surcharge. Otherwise, you are 25%. If you are availing of exemptions, then you are 35%. In the case of individuals, you go all the way to 43%. So this probably is not something which has been very usual for the last 20 years. It used to be so in the past, but this is again something which is phenomenally new. That's one point I would make. I would agree with what Ashok is saying about the regressive nature of indirect taxes. But there is also one other aspect of indirect taxes, which is that it is not prone or susceptible to leakage. It's easy to collect. I'm not justifying it. I'm just trying to put a proposition that if you have a tax on petroleum products and that accounts for 2% of the GDP, there is hardly a leakage. The moment you buy, you got to pay it. In case of income tax, there is still this issue about leakage, people planning, etc., etc. So that's one other aspect. And in fact, increasingly, if you recollect, Govind, over the last few years, every time there is a budget, there are rumors going around. And one of the things which is being spoken about is banking transaction tax, where when you withdraw money, you pay things like that. Now, again, none of these are equitable, but they do have this simplicity and therefore ease of collection and also a lower cost of collection. You have an entire administrative machinery to monitor income tax. On a excise duty or a GST on petroleum products, you really don't need to have so much people out there. You are just sort of able to monetize and make it so your cost of collection to the total amount collected is very, very low. I think increasingly, and again, I totally agree with what Ashok mentioned, that some of this is a phenomenon of COVID. The fact is that corporate profits last year were under a pressure in many, many cases. Consumption was what it was. Again, petroleum, all of that led to the percentage of GDP for indirect being much higher. And I don't see this trend necessarily reversing. Petroleum has been a boon to the government. The prices of petroleum today are equal to what it was earlier when the price of petroleum globally was probably twice what it is today. So really that reduction in the prices has been substituted by the higher levies which the government is making, and which is one of the reasons, Govind, again, why a government has not bought petroleum in the GST net. So I really don't see this trend changing. I only see this trend going up and up and up.
Right. So when you say the trend going up, you mean we will be paying more indirect taxes rather than. So now, does that mean that you see taxes actually going up on the goods and goods we consume or the services we consume?
The rate doesn't need to go up, Govind. I think the consumption itself is going up.
Right.
As I see when people are coming out today, you've been reading newspaper reports. I don't know how much to believe or not believe them. But when somebody comes and says that Mercedes launched Maybach in India and 50 got sold in a jiffy, or Lamborghinis got sold in a jiffy, this is obviously out of tax-paid money. But not much of it is going to really go back into the government in terms of direct taxes. There's going to be a lot more in terms of indirect taxes. Because the moment you sell a car, there are 20 other taxes which you're going to collect.
Right.
And again, there's going to be petroleum.
Right. And the second part of my question, Mr. Kanabar, was how does this compare with other tax systems elsewhere in the world? Is this one is that whether the trend will change or not, but is this the direction that we're going? Is it in consonance with what you see elsewhere?
So two parts. In most developed countries, the rate, the percentage of direct taxes is much, much higher, but that is for a different reason. So take, for example, you take UK. The individual tax is 45% and sort of kicks in fairly early. You look at all the Scandinavian countries, you go right up to 52, 53%. But all these countries equally have social benefits, etc. So to compare the two simply in terms of percentages may not be right. If you are going to pay a much higher rate of direct taxes, and therefore the direct tax collections go up, but the government has got a healthcare system, a social security system, which is of a different order altogether, then it's really very, very different. So yes, in developed countries, direct taxes are much more than India, but the two are not comparable.
Okay. And AKP, let me come back to you on that. So how do you see this? So one is the argument on equity and creating an equitable environment for taxpayers. And the other is that we may have no choice but to depend on indirect tax because that's the simplest way to collect more taxes.
Well, I think, it is a dilemma. It's a policy dilemma for the government. The government ideally should move more towards direct taxes and less towards indirect taxes. But I agree with Dinesh that there will be an increase on indirect taxes because it is not only, is less leakage prone, but it is also got a obvious inflation-induced buoyancy. Most of the indirect taxes are ad valorem rates. Except on petroleum products, some products, they are ad valorem, which means that if the prices go up of a product from 10 to 15, automatically the excise collection or the GST collection goes up. So if inflation goes up, the government also makes money out of that because they get more collection. So I think that the attraction towards indirect taxes also comes that it is easy to collect, it is less leakage prone, and it is because it is ad valorem, it actually can collect more. And the final point of why the government will prefer indirect taxes, and I agree with him that indirect taxes share will go up, is because indirect taxes can afford the government to levy a lot of the part of the levy in terms of cesses and surcharges, which direct taxes also have it, but less. Now, the beauty of the cess and surcharge in indirect taxes is that the center can keep the entire portion of that cess and surcharge with itself instead of sharing it with the states. So center, if you look at the last 10 years of cess surcharge component in overall indirect taxes, you will be shocked to know that how it has actually gone up, and which has actually meant that the center has been able to pocket more of the increased revenue than it should have been shared with the states. So I think for this variety of these 4 or 5 reasons that I gave, I think I agree with Dinesh that there will be a tendency to skew it further and indirect taxes will more and direct taxes will less. Another reason for why direct taxes will not see the kind of rise that we should see is because I think the government is in a welfareist mode right now, and I don't see the government will. Already in the last 3 years, you will see that the tax coverage has come down substantially. In a sense, we have the number of people who are paying taxes, the individual income taxes, and actually has come down in the last few years because the slabs have been raised, the exemption levels have been raised, and similarly, the rates for corporation taxes have come down. Now, I'm not questioning the logic of it, but I think in a country like India, when you do these changes, the net outcome of it is the distortion like that we are seeing today, where indirect taxes will be more and direct taxes will be less. And probably we'll very soon reach the level that we had in 1990-91, where 8% of GDP was indirect taxes and only 2% of GDP of direct taxes.
Right. Okay.
I'll just supplement
ahead.
a point which Ashok made. I think he made a very interesting observation about ad valorem nature. Now, look at what is predicted over the next 1 year. We are likely to have a consumption boom because of the lockdown and people wanting now to go out and buy, and inflation, which is supposed to be a hyperinflation. We don't know where this will go up. And therefore, even at constant rates, the amount of indirect tax collection will go up. I totally agree with that.
Right. So if we were to look forward and closing questions, so as an individual, I'm paying income tax, which is at a certain level, but I'm also seeing in a depressed environment, let's say prices of goods and services that I consume go up. It's very likely that my income in itself is either stagnant or maybe even coming down or lost. So how is this likely to play out in as you look ahead? And let me begin with you, Mr. Kanabar.
So two parts. History has always shown that whenever the rate of direct taxes goes significantly higher, there is a tendency to plan, tendency to, and I'm not using the word evade, but try and find legal ways of sort of putting the tax levels down. And I have seen this personally quite a bit, that people who are very happy paying a 35% rate of tax, when it came to 43, tried to plan around that such that 43 could actually become 20. So you took an aggressive interpretation planning such that you converted your income to capital gains, but you would try to bring your tax down. Whereas at 35, people were reasonably comfortable to say, fine, if that's what the government is doing, we are okay with it, number one. Number two, I think there has been a lot of unearned money which has come in the recent past on account of stock exchange. And the amount of money which is being pumped in the system, as you are seeing, is enormous. And I do not see that really going down. So the money available to people for disposal, at least I'm not talking about the middle level and the lower level, at a higher level, will continue to rise. Inflation will, of course, dip into the savings and whatever else. And it will be interesting to see. And I would like to believe, and I would be very interested in hearing Ashok's view on that, as to whether in the next 2 years, our savings ratio, which has already been going down significantly, will continue to go down even more. I do think so, but I'd be very interested in hearing his thoughts.
Okay, AKB, over to you.
No, I think that going forward, you will have a major dilemma in terms of the policy options that the government has in terms of what kind of taxation you should do. I personally feel that, we are both an undertaxed and undergoverned country. In a sense that at our level of incomes, I think the kind of exemptions and the kind of the slabs that is already in place are probably need a further review. Having said that, I'm not saying that we should be a high tax country. Taxes can be better governed. But at the same time, if you tax less, it is not necessary that you will see an increase in the savings rate, just to answer Dinesh's question. Because if you are, let's say, in a low tax to GDP syndrome, the international experience also has not necessarily seen a higher savings rate. What can lead to higher savings is probably the availability of those savings instruments and a more developed market for such savings. For example, if the international pension market, the guys like in CalPERL and all that, would come to India, I'm quite sure that India's savings rate will see a kind of a benefit that we haven't seen so far. So it's a complex problem, and I think we have to deal with this problem. Taxes will be pinching us, but for a developing economy, I think taxes will pinch the people of the country. The problem is that the perception of service that a taxpayer gets from the government and the tax that he pays, that gap is quite huge, and that gap also needs to be reduced. If that gap is reduced, I have a feeling is this, that we are at that stage of the economy where we can be taxed a little more.
Right, and last question to you, AKB. So, and to the point that you made as well. So, where are we, and should we worry as we look ahead about equity and equitableness? And if we are saying that we are likely to see even more emphasis on indirect taxes, does that mean that we are going to enhance inequity or maybe not care about it at all?
Well, I think it is not just a question of inequity. it is a question of you to have a simple, transparent tax framework also. Now, what is happening right now is that because you have got an inverted GST structure, you are seeing demands for reduction in the GST rate for a variety of items. Now, unless you simplify the tax structure, unless you make the GST structure less inverted, I don't think that you will be able to solve this problem of equity and making sure that the people who should be paying should pay that tax. And it is not that everybody, irrespective of your income, pays the same tax at the indirect taxes level. I think that will, deepen the inequities and inequalities among people. You can't expect a person who is having a car and buying toothpaste and paying the same tax, and so therefore the preponderance of indirect taxes must come down.
Okay, Mr. Kanabar, last word. We started by saying that we are seeing all these unusual trends in terms of tax collections. Is this something that we should be worried about, or should we be not concerned or mildly worried as we look ahead? Last question.
Two quick points I would make there, Govind. One is I'm sure we have all been reading, but forget the reading part. I'm actually experiencing people wanting to migrate out of the country. And that is not necessarily on account of high rate of tax. There is also one point which was made by Ashok earlier, that are you getting equity value for money where taxes are being collected, but is the service from the government commensurate? And second is the tax harassment. And I think that's very important. And the other point I would make is that Ashok mentioned about inverted duty. And I think somewhere on the line, one of the things which government still seems to be missing out in this entire zeal of trying to say Atmanirbhar Bharat and sort of manufacturing in India is to rationalize the rate and to see that what can be done to give impetus to manufacture in India.
Right. Okay. I think we've got a fair sense on what we are concerned about and what we should do if we can do something about. Dinesh Kanabar and Ashok Bhattacharya, thank you so much for joining me.